Welcome to another episode of our Sunday market review. Every Sunday, we come your way with market review. We also do the same thing on Wednesdays. The Sunday version is when the market is still closed. And then the Wednesday version is when the market is opened. So today, we want to look at some possible forecast or trace. You can call it signals that we can take when the market opens. I welcome all of you. We've been doing this for quite some time now. And if this is your first time, welcome. Stay here, and I'm sure you'll get to understand us better. Now, for those of you who are already with us for some time now, you know how we do it. So we have a tool that we use for the analysis. We will go to the tool, look at what the tool is saying, and then we go to the MT4 and see what we can probably get. But if you have watched my Wednesday review, you would see that I analyzed the previous trades. So the Sunday trades, I analyzed them on Wednesday. So I wouldn't go back again to that. So if you want to see how the Sunday trades we gave or signals did in the market, you can watch the Wednesday review or the signals I gave on Wednesday, and I'm sure you will see how the Sunday trades went. But quickly on the Wednesday review, on Wednesday, I gave two signals, which is a Euro card buy and then Euro GBP also buy. I gave a TP of 100, like we always do. Those trades are not yet in profit, and they are also not in loss. Actually, they went in profit and then retraced. Okay, we'll go back to the chart and look at it. They went into profit about 40, 50 pips and then retraced back to entry. Currently, that is where we have them, but we'll go to the chart and look at them as we look at the new trade. So first of all, let's go to our tool that we use in analyzing the market. So let's go straight and see the tool, what it has for us today. So this is our tool here, and our tool gives us an idea of what pairs we should be looking at or what currencies we should be trading. So like we always do, we analyze the market by looking at the monthly time frame, the weekly, and then the daily using this tool. If you want to know how to use this tool, you go to the part 51 tutorial video. We have a lot of tutorial videos on this channel. You go to the part 51 video. When you go to the description of this video, you will see the playlist link. The link to the playlist is over there. Once you click on it, it will take you to the full tutorials. So the part 51 will give you details of this tool over here. So quickly, let's analyze the market and see what we can catch. Let's look at the weaker and then the stronger ones, as we always do. So let's take the stronger ones first. The stronger ones on the monthly time frame, we have Chef. Let me cap it. We have Chef and USD. That is on the monthly time frame. Okay, let's go to the weekly time frame and see. On the weekly time frame, we have Euro and USD. Okay, and then on the daily time frame, let's see what we have on the daily. On the daily time frame, we have Chef and card. Okay, so these are the stronger pairs or currencies that we have on the monthly, weekly, and daily time frame. So now let's go to the weaker side. So with that, we go to the monthly again. On the monthly, let's look at the weaker ones. We have the weaker side on the monthly, we have JPY, and GBP. Okay, that is on the monthly time frame. That's good. Let's go to the weekly. And on the weekly time frame, we have the same JPY and GBP and the GBP, sorry, GBP. And then let's go to the daily time frame. On the daily time frame also, we have USD and JPY. Okay. So these are the currencies we have for the weaker side. So like we always do, let's see what currency runs through all these three time frames. Chef is over here. It is not here, but it is over here. So Chef does not run through all the three. What of Euro? Euro is only here. USD is here, USD is here, but USD is not here. So it looks like CAD is here, but not in the first two. So it looks like on the stronger side, we do not have one particular currency that runs through all these three time frames. That is on the stronger side. What of the weaker side? We have GBP here on the monthly and also on the weekly. But we can't find it on the daily over here. Okay. What of USD? USD is here, but not on the first two. And then JPY is here, and it is here. So on the weaker side, we have only JPY. So we only have one currency this week, which is JPY. So if this be the case, it means that we need to look at JPY pairs. JPY pairs. That is what we should be looking at. Anyway, last week we had JPY pairs in our trades and they did marvelously well. Yes, most of the JPY pairs did marvelously well. Today we have JPY pairs again. Let's go and see what we have on the chart. Now that we have a pair or a currency we should be looking at. So we're going to the chart now and look at the JPY pairs. JPY pairs. Okay, here we are on the MT4. So we are looking at the JPY pairs. Last week, I gave Euro JPY as a buy, last week, Sunday, if you remember, during our forecast. And if you look at it, this is on the 1 hour time frame. If I go to the weekly time frame, you can see it. See how JPY, Euro JPY went buy because I gave it as a forecast buy. Euro JPY was one of our trades for last week, Sunday. It's a buy. And if you look at the weekly time frame, this is weekly. So the market opened here. It went all the way by to how many pips? 570 pips. 570 pips. Euro JPY buy 570 pips. Oh my God. I wish I was only in this trade or I traded only this. For the whole week, 570 pips. Wow. This is mad, man. This is seriously mad. Anyway, now, we are saying that we should be looking at Euro JPY. So, sorry, Euro JPY pairs. Sorry, again, JPY pairs. So, again, I want us to go for Euro JPY as our first trade. And you know what we do? The take profit is always 100 pips and the stop loss is 100 pips. That is the rule number one. So Euro JPY is going to be our first trade. So let me put it here. Euro JPY. Can I change the color to red? Yes, so that we can see it well. So our first trade that we're going to be looking at is Euro JPY. Now, why am I giving Euro JPY a buy? The reason is that this is the peak of the market. And if you look at it as it stands now, sorry, that peak of the market is broken. Do you get it? That peak of the market is broken. It's broken by the candle. This candle has broken that level. It's within the weeks. If you look at it, it broke through and just within the weeks. So I am expecting, if for nothing at all, a bit of the upside move, additional upside move, if for nothing at all, to this very level of the week. So which is going to give us the 100 pips we are looking for. You understand? So I'm looking for 100 pips from this. So that is that. Before, even if it will retrace or it will start coming back down, fine. But I'm looking for 100 pips from this. And that is my reason for giving Euro JPY a buy, because this candle has broken the previous high. It has broken the previous high, which is the resistance level is broken. But sometimes it is dangerous because the market makers, they know that you know that this has broken. So sometimes, listen carefully, here we are learning. As we give the signals, we are also learning. So sometimes once they notice that you know that this resistance level is broken, sometimes they can give you a big pullback to make sure they take off your stop loss, they hit your stop loss before they finally come back and then they go up. Sometimes they do that. That is if a lot of traders are looking at it. If a lot of traders see this as an opportunity and they enter, the market makers can come back. You know, they are also trying to make money from us. So if a lot of people are going to be entering this trade as a buy because this resistance is broken, then the market makers know definitely they will go buy. But before they go buy, they want to come sell, hit your stop loss, or take your money. Then they can finally come back and then they go buy. So you need to be on the watch out or on the lookout. But it's always good that your stop loss is there. So you put your stop loss. If it hits, fine. But it's a buy. That is what we are going for. A buy for this. So Euro JPY is a buy. Are we good? Euro JPY is a buy. Euro JPY buy. Okay. So we are done with that. Let's look at the next JPY pair. Look at the next JPY pair. So you see, it also went buy. Also went buy. For how many pips? This is 565 pips. 565 pips. This is weekly time frame. One candle for the whole week. 500 pips. This is serious. So, yes. Okay, I'll give this trade to a buy, which is GBP JPY. So let's go for a buy for GBP JPY. Okay. It's kind of, I'm seeing something else. So I'm kind of contemplating. You know what I'm seeing? Let me show you what I'm also seeing. I'm seeing a shoulder here. I'm seeing a head here, of which I'm thinking this could possibly be another shoulder. And if this pattern works or triggers, then it means we should expect a sell. But if this pattern is not going to hold, then we should see an upside buy. But this is what I'm looking at. That is what I have just seen right now. I don't know what you also think. I'm kind of seeing, because this was a big retracement candle, which has become a shoulder. We got other wicks over here, giving us the head. And we are seeing, or should we say this is the shoulder, another shoulder? No, I doubt it. This is not a shoulder, but this is coming at something looking like going to be a shoulder. But is it going to be a shoulder? This is a bit of uncertainty. What do you think? I was thinking we should go for a buy for it, but I don't know what to think right now because I have just seen this and it's giving me kind of not sure. But okay, let's hold on with this. Let's look at the other pairs. Okay, let's look at the USD JPY. Okay, this retracement is huge. This retracement here, the wick I'm seeing here is very huge. So what do I expect? Look at the week alone. From here to the week end of the week is about 250 pips. And the body alone is also about 250. So almost half. The body is half. The week is also another half. So this pair USD JPY also made about 500 pips, if I'm not lying. Yes, almost about 485 pips USD JPY. But the retracement is also something that I'm kind of contemplating with. But if you have to go for USD JPY, you can go for 50 pips. USD JPY 50 pips. Yes. This is the only exception I will give. USD JPY, you can go for 50 pips. 50. Yes, 50 pips. Even if it goes more than 100 or 100, fine, but 50 pips. If you take USD JPY, you go for 50 pips because of this retracement. So they all know we have seen this retracement. So if people are going to start selling, they may try to go up to get some stop losses before they come back to the sell if they have to go sell. So yes, going for 50 pips wouldn't be bad at all. So this is weekly time frame. So 50 or so wouldn't be bad. All right, let's continue. AUD JPY. Wow. So it means this week JPY was totally flat. And this is serious. Look at it. From here up to here is also about 300 pips for AUD JPY, about 300 pips. But what can I say? Is AUD JPY a trade we should take? Let me kind of zoom in and see something. My people, let's look at it well. Okay. I'll say no. Let's see this. Let me see this one too. Wow. Chef JPY, a crazy pair. I tell you, it's one of the craziest pair I've ever seen. Whilst other trades are making 500 pay, this one alone about 620 something. Very crazy pair, huh? Anyway, and then NZD Jpy. Let me look at it. Okay, this has also broken this resistance. NZD Jpy. Yeah, NZD Jpy. Maybe a buy on this. Yes, let's go for this. I think this is good. NZD Jpy has also broken the resistance level. You understand? So I'm tipping that one also. NZD Jpy. NZD Jpy. Yes. I'm tipping this also. Okay. Okay. So how many trades do we have? We have 3. Don't forget, USD Jpy, I said you can go for 50. USD Jpy. I said you can go for 50 pips, if you remember. I said you can go for 50 pips. So 50 pips take profit. Yes. So we have 3 trades now for this week. But I don't know what you think about the other JPY pairs, especially with GBP JPY. I don't know what you think. GBP JPY. Okay, let's add GBP JPY. GBP JPY. GBP JPY. Let's add it. Let's add it. Okay. GBP JPY. Let's add it. So we have 4 trades. 4 trades. It's okay. These 4 trades are okay for me. But there's also something I want to show to you. There's something on price action that I did. And I want to show you that. Okay. I want to show you that. So let me take you to my other chart. Let me take you to trading view. Okay. This is trading view. Okay. So there's something, some analysis that I did, which is purely price action. and I want to give you those price action trades. Please put them on demo. Don't put them on live. I'm trying to come up with something new, but we need to build confidence in that also. So this one is purely price action. We are not using any tool to decide. It's just pure analysis. So when you come to this, I have already done them. The first one is Euro USD. Euro USD, yes. So if I hide this, let me go to 15 minutes and zoom in for you to see something. Sorry. Good. It's now coming and making sense. Good. This is a trade that I have made. Good. This is the trade. Pure price action. This is Euro USD. Even if I take it to 1 hour, I actually did the analysis on 1 hour. If you look at it, this is it. It broke through this, but on 15 minutes, you see it better. So if I switch to the 15 minutes, you see it clearer. So based on this channel, which is broken, I am foreseeing a buy. So Euro USD, I said buy Euro USD. And this is it. If you look here, you see the take profit price here. So the take profit price is over here. This is the take profit price, which is 1.01285. And then the entry price, the price of the market is currently at 1.00467, but the entry price I have given is 1.00277. And then the stop loss is 0.99777. So the stop loss is 50 pips here. The take profit is 100 pips. Euro USD. This is the price action analysis that I have done. So you can try this on demo also, and let's see. There's also another trade I did purely on analysis in terms of price action, which has to do, I know you people call it price action, but I call it the naked chart analysis because there's no any indicator on it. There is no any tool that I am using. I'm just basing on what I see on the chart, the naked chart, based on what I see on it, based on the patterns and the trend lines, and then whatsoever, I'm able to predict this, looking at the nature of the market with the impulse and corrections. As a result of the impulse and corrections, that is how come I've been able to come up with this. So this one has no indicator or no tool. It's just the naked chart, analyzing the naked chart with the knowledge of the structure of the market and then the nature of the market. Is that okay? So this is Euro USD. There's also another trade here that I analyzed, which is AUD USD, I think. Yes. Yes, AUD USD. So this is also AUD USD. If I zoom in well, yes, this is on the 15-minute time frame. So I'm sure you can see it well. So AUD USD, that's the Australian dollar versus the United States dollar. And based on this, you can see the structure the market is following is broken with a big impulse on the upside. Since there's a big impulse on the upside, currently the market is kind of correcting itself. So if it's correcting itself, then I'm expecting another impulse after the correction. So if you watch my last tutorial video, which has to do with episode 63, or is it 62? Episode 62 or 3, let me be sure, because that video is on the naked chart analysis, the beginning of it. And we talked about the impulse and correction, which has to do with the nature of the market. So that is part 63, yes. If you watch my part 63 video in the tutorial lessons, we talked about the nature of the market. So there was an impulse here, and then a correction, and then a big impulse to the upside. If you look at it, if you want me to zoom, for you to see what I'm talking about. Look at it. Look at it. So it's been in a structure. It broke through that structure with a big impulse, with a big movement on the upside. So it is in the correction phase. So now that the market is in the correction phase, there should be another impulse to the upside after the correction is made. So the market always moves with top speed, and then it slows down a bit and then go again with the top speed. So the impulse is the top speed that the market has made. And then the correction is the kind of consolidating part, which is the slow aspect of the market. After that correction, we expect another impulse. So that is how come I have been able to predict this market as also a buy. So this is also a buy because the structure in which the market was moving downwards is broken with a big impulse on the upside. So now that it is correcting itself, I am expecting another impulse to the upside. So that is why I'm able to predict this trade as what? A buy for AUD USD. And then this is pure price action, like I told you. There's nothing like indicators or any tool anywhere. And if you go and watch our part 63 video, if you haven't watched it, please go. The tutorial video, part 63, we are beginning to talk about analyzing the naked chart. So how you can analyze the naked chart, which has no indicator, which has no tool, okay? And I said in that video that I am open to 10 people, only 10 people. I want to help 10 people. If you watch the end of that video, there is an announcement there. At the end of that video, there is an announcement. So the part 62 video, 63 video, the nature of the forex market. If you watch that tutorial video, there's an announcement at the end of the video. If you like, go and watch that announcement. And if you are interested in that announcement, you know what to do because I put whatever you need to know or need to do over there at the end of that video. So that is that. You can go and listen to the announcement. So this is the second trade I have made based on price action or the naked chart analysis. And then also there is also another trade. There's also another trade. Let me go back and see. I think it's NZD USD or so. Is it this one? Yes, it's NZD USD. So these are some analysis I have made. I'm zooming out again so that you can see it very well. So this is also another trade, NZD USD. You see, it's been following a structure. That structure is broken with an impulse to the upside. An impulse to the upside. And currently it is correcting itself now. So I'm expecting another impulse to the upside. So that is why I have given this trade also a buy, which is NZD USD. So these are the trades I have given based on price action. I have done as a result of price action or the naked chart analysis, which I will call it. But I'm sure you don't normally call this price action because that is how a lot of people call it. So I have given you the analysis based on the tool, and I have also given you my own price action setups using the trading view. And I've already explained how you can also use the trading view for your analysis. So you can go and look at it. If you haven't watched that video, you can go and watch. So maybe you can put this analysis on this naked chart analysis or the price action analysis on demo. You can put that on demo and let's see how it turns out. Is that okay? But I have begun how you can equally do this analysis. And that is the part 63 video. The very first part of it is the nature of the market, which has to do with impulse and corrections. The next one we'll be talking about is the structure of the market. So after that, we will look at the next one. It will all add up to make sense when we are done. So if you haven't subscribed to this YouTube channel, please do, because we have a lot of videos coming your way. And I know you can't afford to miss these videos when they come. So subscribe. I want to get to 5K subscribers at the end of this year. So we have 3 months to go. So help me reach 5K subscribers. Thank you. And thank you for watching. I'll see you in the course of the week, which is Wednesday. Yes, on Wednesday, we will come your way with another analysis to see how we can take some other trades. Okay. I'll see you. Love you. Thank you.